Hey guys, this is Cast for Closers, your podcast for dominating inside sales and hitting your quota. This is not a common episode. This is a very, very special episode. This is number 100, our 100th episode. And if you guys remember well, on episode 50, we had a very special guest for us, Meetime, Eric Santos. Back then, he agreed to make that special episode and it was unique. And now again, we have our 100th episode and we bring him, the man who wrote the sales acceleration formula. For us, Meetime, he's the man who brought science and method to sales, and also the man who believed and jumped on Cast for Closers on episode number 8, believing these Casts for Closers, this podcast would be something. Ladies and gentlemen, we have Mark Roberge again. Mark, this is like the David Letterman show on Netflix. My next guest needs no introduction, but except for the David Letterman part. So please feel free to spend a couple of minutes introducing yourself for those who don't know you. A little more about Stage 2 Capital.
Sure. Yeah, sure, Diego. Well, thank you for that generous introduction. It's great to, I think it's been 3 years or so since we talked. And
yes,
I know
3 years.
We got to meet finally last year in Sao Paulo. I was fortunate to get down there twice in your winter to the great city and meet really amazing people. So thanks for having me back. I'm excited to talk about, our journey today. I've been an entrepreneur for roughly 20 years. Started a couple of companies. The most notable was my last operating role at HubSpot. I was the 4th employee and ran global sales for them up to the IPO. It took about 9 or 10 years to get there, but it was a really exciting, stressful, and rewarding journey. It's been 3 or 4 years since I left. I did write a book called The Sales Acceleration Formula that Diego mentioned that, thank you for all the feedback on that. I'm glad it's been helpful to the entrepreneurs. That was the intention. And I joined the faculty at Harvard Business School to teach the students entrepreneurship and how to sell and help codify that practice, which it's been fun the last 4 years to do that. And I've been able to see a ton of different startups, probably a handful every week to see what challenges they're going through and have been, starting to codify kind of a new process on how to scale revenue. And so more recently, I was approached by a young investor at Bessemer, J. Poe, to start a venture capital firm, which we did last year, very much in line with my mission recently of trying to help entrepreneurs with their go-to-market and their sales. So we raised all of our money from sales executives, basically, sales, marketing, and customer success executives. We have almost 100 investors in our fund. And, if you think about some of the biggest software companies in the world, like their heads of sales, their head of marketing, are investors in our fund.
Wow.
So we're really out there trying to help, entrepreneurs who have gotten past product market fit and now are thinking about scaling revenue. And we're there to help them do that as an investor and an advisor. So we've made 8 investments in the last 9 months. We'll probably make another 7 or 8 more. And it's been an exciting way to express the same overall mission of helping entrepreneurs with their revenue growth.
Yes. So this is very different from everything we recorded so far, Mark. This transition from vice president of sales, right, from HubSpot to a VC perspective and how you analyze a deal today. So my first question, you started as a VP, as a 4th employee from HubSpot, and after some years, then jumped to the other side of the table. Since you were on the trenches, Mark, what has changed as the way you analyze a business, and what did you gain from being a VP now as a venture capitalist?
Yeah, sure. So I think a lot of venture capital firms are trying to enhance and increase the value they can add to operators, and they do it in many different ways. I think if you look at the venture capital community 20 years ago, it was much smaller. I think it was roughly a 30 or 40 billion dollar annual market, and now it's like 10 times that. And so there's back then, just having money was all you needed. There was a lot of deal flow. It wasn't all you needed, but there was a much different balance between supply and demand. And now it's just a lot more competitive for good deal flow. And so most venture capital firms are trying to enhance the value add they can create. Now, for me, I didn't necessarily aspire to be a venture capitalist. It was more like I aspired to give back to the entrepreneur community that has given me so much and give back with my experience, which has been more on the revenue side. I really enjoy that side. And this was just a very high value way to do that Jay had approached me with. And it's gained a lot of momentum. And so, we've really been able to, really just continued the work that I've been doing, which has been getting to know different startups at a deep, deep level and helping them see issues on their revenue growth that they may have missed because they're a first-time entrepreneur or because they're just not an expert. They're more of a product person. They're not an expert on revenue and sales. And really just applying that to our work as an investor. So in terms of like what's different as well, in terms of some of our investment thesis and the pattern recognition that I've seen, is I do think that there is both the general entrepreneurs and general investors overemphasize top line revenue growth prematurely and don't have a deep understanding on when it's time to scale revenue fast and how fast to go. And that's really been the framework that I've been working on that helps us decide which investments we'd like to make and helps give us guidance as to how to help the investments that we choose to get into to engage with.
Wow. We will dive in a few minutes about premature growth. You were talking essentially about enhancing value. I was thinking about Meetime's past and what you would add to us. And I think having your background, companies could benefit from the specific with which is wrong assumptions, like how fast does the market accept a new product? How fast does a rep hit quota? How realistic is the sales forecast? In the beginning, we have so much good guesses and benchmarks, and I think having a seasoned former VP as a venture capitalist would help us and a lot of businesses with these wrong assumptions and to see the market as you were talking and generating a sustainable growth, right?
Yeah, I mean, thank you for commenting. That was our thesis, and it seems like it's played out with the entrepreneurs we've gotten involved with. Is the venture capitalists that I've worked with over my career have been amazing mentors to me, and helped grew me as an operator. I do think, generically speaking, many of them have extremely deep finance backgrounds, and many of them have extremely deep product backgrounds. I don't think there's a lot of venture capitalists who have extremely deep sales backgrounds. And so that's been another sort of, opportunity that, we wanted to approach. And so far as some of these top entrepreneurs and ventures are raising capital, they see it that way. They really like having us involved in the deal because it nicely complements the overall investor portfolio that they're attracting.
Yeah, makes a lot of sense. Mark, let me dive now in this subject that you approached, which is premature growth. You were seeing you and talk from you on SaaStr. And yes. You said if you had to do it all over with HubSpot, you would first make sure the first clients were having absolute success with the product. You would then fix the unit economics and only then try to bring scale and not scale first. Another video I was watching you and Michelle Law on sales mistakes. You both had premature growth as your number one mistake. So how can you dig into this subject when why companies should look for sustainable growth instead of high performing growth in the beginning?
Yes, it's been amazing because that's just been the absolute obvious pattern that I've seen in working with lots and lots of companies the last few years at this stage is when they should grow and how fast. There's just, I find a lot of uncertainty. And so I do think that as entrepreneurs, thanks to the work of Lean Startup and Agile and Eric Ries and Steve Blank, we have gotten to be much better entrepreneurs in the first phase of a business. We involve customers, we do MVPs, we prototype, we are agile, we iterate. It's just a lot better.
Yes,
but I think there's a lot of confusion is once someone considers themselves to have product market fit, which they define as we have 5 customers that like our product and the product doesn't have bugs, there's just a lot of uncertainty about how you go from there to like tripling revenue and adding 1 salesperson or 2 salespeople a month. Because in my experience, most companies that hit that stage, they raise a Series A and then they hire 10 salespeople in the next month. And they don't have a lot of, they haven't built up the capabilities on how to hire salespeople, how to train them, how to run a playbook, how to generate demand. There's just a lot of missing things that I think contributes to most of the failure in venture creation. And so it's that stage that I've been really researching and helping companies with, and it's that stage that we're investing. Right? So basically what I've done is summarized sort of a framework or sequential playbook that a company can follow. Once they've hit those, I have 5 customers that like me and my product works, to get you to I'm adding 1 or 2 salespeople a month and I'm tripling revenue. And as you said, there's 3 steps. It's product market fit, step number 1, go to market fit, step number 2, and then growth and moat. And the way that I define those is product market fit is a little bit more than what I think the typical entrepreneur considers it. It's less about just having 5 customers and more about you're signing up customers, whether it's 2 or 3 a month, maybe more, at a consistent pace. And you can demonstrate that most of them are seeing the value you promised within a short period of time.
Yes.
Right. So something like 70% within 60 or 90 days are saying, yeah, you sold me on this product and you promised me this. 60 days later, I see that value. All right. So and there's ways to quantify that. The entrepreneur ecosystem talks about that as like the aha moment, the leading indicator of customer success. And it's a really critical decision on how you define that and measure that. But that's the product market fit stage. And
makes sense.
When you're in that stage, that has a profound impact on all your go-to-market decisions. You hire a different salesperson at that stage than later stages. You compensate the salesperson differently. You generate demand differently. You may even run a slightly different playbook. Right? So that has a profound impact on what you're going to run. And if you run it correctly, you'll move through that stage very quickly. I've seen companies move through that stage in like 2 months. And then once you get there, you move to the go-to-market fit, which means that you do everything you did in the prior phase. You're creating customer value fast, but you do it profitably. That's so positive unit economics in a SaaS business or profitably in a non-SaaS business. And that's when things like the sales comp plan become really important. The pricing model becomes really important. A scalable sales hire, a scalable playbook, scalable demand gen becomes very important there. And we need to check off those boxes. I've seen companies fly through that pace, but other ones I'm working with some companies that's still taking us like 6 months just to get through this phase. Okay. And then once you can show that, then you're ready for the growth and moat stage. And what I mean by growth is we don't go from 5 salespeople to 20 in 1 month. We start with a pace and we hire 1 rep a month and we do that for 6 months and we watch the product market fit indicators and the go-to-market fit indicators to see if we're breaking the business as we hire. If we don't, we go faster. If we do, we slow down. Yes. And that establishes a pace for us. And the moat part means at this stage, we need to be thinking toward our defensibility, our sustainable defensibility. And oftentimes within the go-to-market strategy, we can build that up. So in 5 minutes, that's the extent of the framework. And it just helps us to go from that 5 customers to tripling revenue in a sequential gated way. And it helps us understand what stage we're at and what the implication is on our go-to-market decisions based on that stage.
Makes total sense, Mark. I was talking to Eric Santos from Resultados Digitais these last days. And here in Brazil, this is also a problem because you take not so accurate assumptions, you scale too fast, you struggle with churn, you throw people to solve the churn problem, you change the offer, you slow down, your growth metrics fall. So if you scale too fast, this is a problem. And we are seeing companies doing that and reframing their own success and scalability models. So it's happening here too.
Yes. I think this, I haven't restricted my investments or advisory work to U.S. companies, to North American companies. I do a lot of work across the world. Yes. And I don't think it's unique. I do think it's most prevalent in SaaS. And as businesses move to a more subscription model, which is happening a lot, even outside of software, music, food, razors, right? A lot of people are moving
home appliances.
Exactly. It's moving to subscription. And when you move to subscription, retention becomes critical. And this foundation of like showing customer value fast becomes critical. And that, I don't think it would have been as important 20 years ago when we were selling big on-premise software. But today, with subscription economy, I think it's really important.
Yeah, mandatory. So, Mark, I know we have a hard stop. I have two more questions. Mm-hmm. One is especially from the person who leads these changes. I'm especially interested on how you analyze a sales VP right now as you're entering new businesses. So, what are the traits you look for now that you weren't aware back then as a VP yourself?
Yeah, sure. So it's really, the right VP is also aligned with the stage you're at, right? So if I'm interviewing someone who is that very early part of post-product market fit, they've got 5 customers, it's bug-free. I don't need a VP at this point. I literally just need someone that can just go bring us, 5 customers a month. But oftentimes people just hire a big VP and it breaks at that point. All right. So, but as I move forward, usually at this stage around the A, again, we don't need this big VP who ran a 100-person team and built up sales managers and designed sales compensation plans, is super data driven. It sounds weird for me to not say that, just say that as a data driven person, but I need them to do 2 things really well. Hire salespeople that are appropriate for my business, and develop them. That's it. So that's really where I focus. Is tell me, if you're interviewing for a job at Meetime for VP of sales, what would you look for in a salesperson for Meetime, and how would that be different from your last role, and why? I want to see that they can context shift, and then what sales playbook would you run, and how would you develop them? That's what I need right there. Okay. Now I was interviewing someone for a CRO role where they already have, 20 reps. Now that's different, right? Now this is about how do you align marketing and sales and customer success, right? How do you, how do you develop a culture? How do you develop managers, right? It's really just interviewing for the role that I have. And again, you will be surprised, Diego, to say that I don't put a lot of emphasis on data abilities, because I think if a VP of sales can demonstrate the skills that I'm just asking about now, hiring reps, developing reps, etc., I can get them a good number 2 sales ops person to do all the data for them. I can find that person.
Makes sense, Mark.
Most people are surprised that I have that view given my book and everything, but that's my
Before this interview, I was prepping my notes on the questions. I would guess it's hiring capability, because we have so much talent. It's a team's game. So I would guess that you would call this hiring capability and training capability. But yes, looking over the profile, over the data side of the business kind of surprises me. But
yeah.
So Mark, this leads up to my very last questions.
Mm-hmm.
There were 2 VCs on Cash for Closes before you, and both of them put an absolute emphasis on the importance of the first sales hirings, as we were talking previously.
Yes.
So since you're not anymore on the trenches, how do you analyze the quality of a sales team looking from outside?
Yeah, a lot of it's the leader in the questions that I just went through. But if I'm talking to an individual salesperson, I want them, I guess the quickest thing I look for there is their ability to understand buyer needs and then tailor the product pitch to those needs. And, so I'll just have them walk me through sort of a last sales call. How do they approach it? What's the playbook they're following? The majority of early stage ventures that don't have a lot of professional sales capabilities are doing what we call show up and throw up, and really just, trying to get people on the phone and tell them about their product. And there's reams and reams of sales data and anecdotes and work that shows that is significantly underperformed sales teams who have a methodology that allows them to understand the buyer's preferences, decipher whether or not they can help with those needs, and then tailor the pitch in a way that best resonates. I'm not creating anything new here, from challenger sale to spin selling to how to win friends, from Dale Carnegie. Like, this has just been a century of knowledge in sales, but unfortunately the majority of early stage teams and sales professionals in general struggle to follow it.
Yes. So to quote Jason Lemkin, who was talking about this, he said to me that the first sales hirings should be people who you would buy from. They should be intelligent and savvy enough to walk you through the process of discovering needs and presenting something instead of showing up and throwing up. So kind of resonates with what you told here.
Totally. Jason's extremely thoughtful with these things, and absolutely, I'm not surprised to see consistency.
Yes, he also told about diversity inside this first sales team to help the manager to run all of them. So Mr. Dashboards, Mrs. Networking, kind of a lone wolf. This mix kind of helps the manager to grow faster. So diversity.
Interesting. That is interesting.
Mark, I'm super excited to have another episode with you. I want to thank you for your precious time being with us in this very special episode number 100. So please feel free to leave your contact to hug our audience.
Yeah, of course. If you just go contact me on LinkedIn, I'm very active there. You can send me a message and we can connect there.
So guys, this was Mark Roberge on Cast for Closers again. Thanks a lot for being with us, and see you on next episode.